Hello and welcome to the CPI preview with ATFX. My name's Nick Twidale. I'm the Chief Market Analyst. And huge data coming out this week out of the US. Massive potential for big moves in the market. And as always, we're going to have a little look at the data for you and then see where there's some trading opportunities in the market. Now, of course, as always, we're looking at data today. But we can't ignore what's been going on the geopolitical front. So just a quick recap of what we've seen over the weekend. I'm currently talking to you from Monday. So big reaction to what's only been seen as positive news out of Switzerland, where the US and China have had meetings over the week. And both have saying good progress has been made. We're still waiting for details later today, probably in the US session, but it's put kind of a positive spin on a lot of things that have happened. If you asked me this time last week, we were probably more in the doldrums, but certainly that's helped what's going on in the market. And it will have a big effect on how the data coming out, and specifically the CPI data coming out this week, will affect what the Fed's thinking and obviously then what the rest of the market's thinking. So what we've got to look at with the Fed, obviously, CPI is one of the biggest inflation indicators that they use. We know they use the PCE price index as well, but the CPI is the major inflation number that we get across all jurisdictions, and the Fed pay very, very close attention to it. Once again, we're expecting to see big moves in the dollar, but bear in mind, those moves will come on the back of what we got from last week's Fed meeting, and they were resolutely hawkish while on hold. And even though we're expecting a cut to come from the Fed, they're still holding in there. And inflation is one of the reasons why they're doing it, and the jobs market's the other one. But this is a key data piece for the inflation side of the Fed's twin mandate. And if we do get something different from this data, expect the dollar to move, and expect it to move hard, I should say, especially in current conditions where geopolitical factors are still influencing the market. So let's have a quick look at the data that we've got coming through. We've got three core components of the CPI number that come through. It's like the headline CPI, which is the month-on-month number, the core CPI, which a lot of people feel gives a truer indication on where that month-on-month number is, because it takes out some of the more volatile sectors. And then, of course, we've got the year-on-year number, which is the one that's used in the headlines when you're looking at global media and the mainstream newspapers. But really, for us traders in the market, we're probably looking at that month-on-month number. Obviously, all of them will have an effect. And if there's a big deviation from expectation in any of them, we're going to see some big moves, particularly in the dollar, and obviously yields will move in line with that. We're going to see stock markets move, and we're going to see commodities move. We'll be looking at that a little bit later. We're going to look at gold and dollar yen today. So first up, core CPI month-on-month and the CPI number month-on-month, both expected to show a 0.3% increase. What we're going to be looking for is any deviation off that. A 0.1% increase or decrease will see traders look to put trades on and look to cover that side of market. But anything bigger than that, if we get a 0.2, if we get a 0.3 difference, then that's probably going to make a difference for some longer term trades. So the shorter term trade, probably not going to get too much of a movement if we get zero or they come out dead on expectation. But anywhere above 0.1, we're going to see some longer term. It'll change how we're thinking about the Fed. The 0.1, always good for a short-term trade. And by short-term trade, I'm talking about 40 or 50 points sometimes in some of the major currencies. So well worth being on your toes for, and well worth trading. Now, the year-on-year CPI number is expected to come in at 2.4%. That's the same that we got last time. It is coming down from obviously what we've seen recently, but not fast enough and not hard enough for the Fed. They want to see it around 2%. So any deviation of that, especially if we see that down to 2.2, or if we see it snap back up to 2.6, or God forbid 2.7, 2.8, then we will really start to see some moves. So I'm going to go and flick over to a couple of charts. First of all, we'll go and look at gold, then we'll look at dollar yen. Both have pretty nice setups moving in the next couple of days sessions and into that CPI number. So here we have the daily chart for gold. Now, anyone following gold, and most people have been in the market, it's had a huge move over the last couple of years, and certainly over the last few months. We've started to see some volatility in the range over the last few weeks. So I won't go back over the whole of the last thing, but obviously safe haven buying has had a massive move since the start of this year. We started off back here down around 2,600 We peaked out at 3,500. Massive moves, huge percentage moves. We all know the story. Now, this is the last few weeks. This is the early part of April, when we got Liberation Day from President Trump, tariffs across the globe, and that's what we're focusing on for a lot of the time. But the dollar's played a big part of this move as well. So you've had some dollar moves, mainly on the quieter days when we haven't had any major geopolitical updates coming through. But as you can see here, for the since we hit that all-time high at 3,000, just above 3,500, we've seen some pretty choppy markets in a fairly wide range, right? 3,200 probably do us on the downside. Currently sitting just around 3,275. It gives a good trading opportunity as we move into this CPI number. Now, if we do see a weaker number, expect to see some gold selling some dollar selling coming through. We would see gold move up to challenge these top side levels. Now, this trend line is probably not the greatest in the world because we're only coming off a couple of pips, but it will feature, as will these highs here, and of course, which they come in around about, he says, 3,437. There's a twin top there, as we can see, and then obviously the next level to target on the top side will be 3,500 an ounce. Conversely, of course, a stronger number, if we get a 0.4, a 0.5, 0.6 on the month-on-month, either the core or the main one, or we get a 2.5, a 2.6, 2.7 on the year-on-year number, expect the dollar to be bought and the gold to be hit, and hit fairly hard. Short-term support, well, actually long-term support on the daily chart will come in around for about 3,100 at the moment, but expect to see volatile in that move as well, because there will be some recalculations on geopolitical risks as we move through those trading sessions. But as I said, trading opportunities in gold, it's sitting nicely in the middle of this range, the support and resistance trend lines. We could get a challenge either way. If we're closer to one of these ranges in the next couple of sessions, break traders will come into play. So a weaker number, somewhere down the zero, somewhere down the 0.1, could see a break of this level, and then we're going to be challenging the all-time high. Conversely, of course, stronger numbers, we're going to come back down here. And if we're anywhere near this support, and I would say at the moment, due to the improving positive sentiment in the market, we might be lower in gold over the next few sessions. Then a break here would open the way up back down here to sort of the 2,800, and that 200-day moving average, which is just under 2,800 at the moment. So plenty of trading opportunities coming in the gold. Let's just go and have a quick look at dollar yen, and then we'll leave you to get on with the rest of your day. So here's the dollar yen chart. Now, I've picked dollar yen out of the majors today because it is sitting closer on the dailies to a very strong resistance trend line and a key technical level. So what we'd be looking at here, we can use this trend line. It is good. It comes all the way back from the start of the year. It's got a nice hit. It's had another couple of hits, and it's topped out just beneath there. So dollar yen currently sitting just underneath 146. This resistance trend line comes in currently around about just underneath 147. What we'd be looking for here is if we do get a softer number, if we get that 0.1, 0.20 on the month-on-month number, a 2.2 or 2.1 on the year-on-year, we can use that. We can sell dollar yen, and we're looking to use this as a stop loss line to the top side. Conversely, of course, stronger number, you probably want to be buying a break of this level. It could take us up to that 200-day moving average at 149. We've then got this high here coming in around 151, and then it's off to the races. But that would take a big number to take us back up to these levels, especially when we've still got kind of a hawkish Bank of Japan in the background. I can't emphasize much this US CP number. What it does, it's about the Fed. And that's where we're looking at the majors. So a couple of good examples of where we can trade this one. Gold, I think, will move very hard. Dollar yen, what you're probably looking for, the purists out there looking for underlying interest rate differentials. We've probably got a slightly hawkish Bank of Japan out there. We've seen the dollar recover. If we got the negative for the dollar yen, so we've got differentials coming in on interest rates. If we've got the Fed and the BOJ going a different way over the long term. So what we'd really be looking for is probably a lower print for the CPI. It would bring in selling pressure on the dollar. It would bring up expectations of a rate cut from the Fed. If we've got hikes coming from the BOJ, which we could get now that we're seeing a little bit of a smoothing in the geopolitical situation, that would be the key to probably open up a move back down to support levels. Coming in just above 140 at the moment, and then the recent low over the year, 139.86. So that's pretty much it. Very big number coming out Tuesday in the US session. 0.3 on the months and 2.4. They're the key numbers. Keep an eye on that. Good luck with your trading. Thanks very much from all at ATFX.